How do the wealthy avoid taxes altogether? In three simple words: buy, borrow, bequeath. Want to know what that means? Jedidiah Collins here with the Money Vehicle Movement podcast. We're trying to make financial literacy more current and possibly even a little cooler. Today, we're diving in how you can speak money and act wealthy by taking control of your taxes without sacrificing any investment growth. Again, we're trying to speak the language of how the wealthy play the game. It's all about learning the powerful buy, borrow, bequeath strategy. This is what the wealthy use to keep more of their money working for them and not for the government. Let's jump into it. First, let's identify the problem. Most of us are W 2 income earners. That means we have active income. And as we make more money, the IRS gets to tax us at a higher tax bracket, up to 37%. Wealthy people don't want to give 37% of their money away, so they use a strategy. Then you look at investors. Oh, that's a great step, Jed. Money Vehicle wants you to become an investor. And they understand as their assets appreciate, they will get to sell them and achieve capital gains 20%, 23.8%, depending on your income level. But again, most wealthy people don't want to pay 20%. So what do? They skip both active income and capital gains. Here's how. Step one, buy and hold. Focus on buying appreciating assets. Think stocks, real estate, even businesses. Instead of selling to get cash or pay taxes on them, just hold. As long as you're holding that asset, the IRS doesn't see a taxable event happening. Your net worth continues to grow quietly in the background while the IRS remains unaware of your gains as long as you're holding. This connects to Money Vehicle as a curriculum as we are trying to get people to see things like investors, act wealthy, and start to make money go to work for them, buying assets and appreciating over time. And if we can reduce that tax liability, then we always want to figure out strategies to do so. Step two, borrow against the assets. This is where the secret sauce comes into play. Instead of selling assets, you borrow against the growth or the value of them. You can take out a line of credit on real estate, borrow against your stocks, or even get a business loan if you're part owner of it. Why would you do this? Here is the big aha moment. Loans are not taxed. You get liquidity, the cash you need to live, make a next investment, or do whatever you want with it without triggering a taxable event. Plus, those investments that you're now borrowing against are still under your ownership and still working for you. Think of it as tapping into your wealth without giving up that ownership. Here's an extreme example. Elon Musk. Ever heard of him? He's worth $100 billion, but he never wants to sell shares of his Tesla stock or any of his company holdings. He just wants the cash to continue to live while still maintaining ownership. What does Elon do? He takes out loans against the $100 billion of Tesla and business stocks and is able to live comfortably without paying a single dime in taxes. Instead of selling, he borrows, keeps the asset, pays a small interest, and avoids taxes altogether. Why would a bank do this? Well, from a bank's perspective, they love this because they get the loan against assets, and typically these assets are pretty secure, and they also want to build the relationship with you, the wealthy individual. They also trust that the assets are in good stocks or companies or real estate and are able to use that as the collateral. Step three, here's the trick. The power of dying with a step up in basis. Again, wealthy, thinking decades. When you pass away many years in the future, the IRS steps in with a huge tax break. They revalue your asset at the current market value, called a step up in cost basis. And this step up wipes out all accumulated capital gains during your lifetime. Think about it. Here is an example. You bought a stock, let's say $1 million of stock, We're talking wealthy here. And it's now worth 10 million as you are about to pass away. When you die, your heirs who is inheriting your estate gain access to those dollars at the current market value, 10 million, not 1 million. If they sell at that $10 million current market value, they pay zero in capital gains because the gain was wiped out in your step up basis as you passed. This is the concept of creating generational wealth, building at its finest. Pass assets down with no tax bill. That is 37%, 23.8% as an instant gain in profit over many other types of income. Think of it like that. Now, you're probably saying, well, what about the loan? When does that get repaid? The answer is sometimes. Sometimes the loans never get paid back during your lifetime. They're carried until your death. Because, as we were just mentioning, when you pass, your estate either is going to settle the loan using some of the assets that you have, or get that step up in basis and remove a lot of the tax burden. For your heirs, the property's new base and market value is going to be tax free, which is amazing. And if they do need it, they can sell some things and pay off the loan if that's the case as well. Remember, wealthy people use this free lunch in investing called diversification. It helps reduce the risk of these strategies, especially if that asset you've bought is dropping in value. We've talked about the importance of asset allocation and insurance, and these are tools to manage risk while employing wealth building strategies. What is the takeaway for you? Maybe you are not wealthy today, but as you look at the next 10, 20, 30 years, you definitely see your net worth going into the M's column. So, this approach, buy, borrow, bequeath, is about long term thinking like an investor, which is our goal. It encourages you to build wealth quietly, leverage assets wisely, and pass on your legacy tax efficiently. Here's a little reminder from the Money Vehicle curriculum. Wealth isn't just about how much you make, it's about how much you keep and how much you focus on making that keep go to work for you like an employee. Maybe this is step 74 in wealth planning and a financial plan, and maybe you're just on step 4. But remember, speaking money, acting wealthy means that you are going to start using these kinds of strategies to maximize your wealth, minimize your taxes, and create your legacy. Buy, borrow, bequeath. Appreciate you listening to the Money Vehicle Movement. We will see you at the next stop.